Hey there, this is Will Allen with Sentara Capital, and we just finished a video with Evan Temple where we went into an update on the U.S. economy, talked about the fact that the economy continues to exceed expectations. We also talked about the housing market here, and we took a look at it from a 30,000-foot view. This was a little bit more in-depth video for those of you who like details and like us to take more time going into some of the data that we're paying attention to. But for those of you who just have a couple minutes, I wanted to give you an overview and the bottom line of what you need to know from the video. So let's talk about the first point, which is that the U.S. economy continues to exceed expectations when we talk about economic growth. So one thing that's very important to understand is that for the last year or so, a lot of economists who have believed that the economy would be going into a recession on an immediate basis. And that just hasn't happened. And one of the things that we've said is if you take a look at the U.S. consumer, because that's what powers the economy here in the U.S. is consumer spending. Well, take a look at what matters to the consumer. Number one, they have an amazing jobs market, and that continues to be the case now. There's over 10 million job openings. We've been chronicling this on our blog over the last year, taking a look at how many jobs are open. And what was supposed to happen by this point in the eyes of a lot of economists was that because of the Fed rate hikes, the economy was going to slow and there were going to be a lot of layoffs. So one of the charts that we talked about in the video that we just had was initial claims for unemployment insurance. And what you'll notice on this graph is that this has flatlined over the last year and a half. This has not gone up, meaning companies are not laying off employees. And that's also evident in the 3.5% unemployment rate that we still have in the economy today. The other thing that is powering the consumer is that they're sitting on higher than pre-COVID levels of checking and savings account balances. And that's whether you are on the lower income scales below 50,000 all the way up to the 250,000 and up income levels. Every quartile there has at least 20% higher checking and savings account balances today than they had pre-COVID, and that is importantly adjusted for inflation. So the economy has continued to be stronger than expected. Here's the number that you need to know. For the third quarter, the Atlanta Fed has a projection of what the GDP is going to be for the third quarter, and it is up to 5.9%. Evan and I, again, will break down and talk about each quarter, what it's been to give you what you need to know if you want bigger picture. But that's the important fact to know. The economy is really stronger than expected. There have been two key developments in the housing market over the last 3-4 years. Number one, home prices have soared by about 30 or 40% from where they were in 2020. So in 2020, the cost of a median home, if you want to go out and buy a house, $268,000. Today, it's $416,000. That's a big difference. The second key variable, mortgage rates have gone up and gone up a lot. In fact, mortgage rates last week hit 7.2%. That was the highest rate for a 30-year fixed mortgage since 2001. So when you put those together, what does it mean? It means that in 2020, if you wanted to buy a house, $268,000, a mortgage rate of 3%, your payment was going to be just over $1,000 a month before taxes and interest. Guess what it's at now? It is over $2,500 a month when you use the $416,000 value with a 7.2% mortgage rate. So it's a lot more expensive to be able to afford a mortgage payment now. And so what that has led to is a lot more people are considering renting and looking at that until either home prices start to come down or mortgage rates come down or a combination of the two. Again, Evan and I break down all the details you need to know, but bottom line, home prices and your mortgage are going to be a lot more expensive today than it was 3.5 years ago.
So that was just Will. He was breaking down the U.S. economy and the housing markets in just a few bites so that you don't have to watch the full-length format where we break everything down with all the charts and graphs that you could possibly need. If you want to get in touch and actually talk with these guys, they will pick up the phone and actually talk to you. SentaraCapital.com for all your questions related to the market. If you like that video, like and subscribe. Make sure to share with your others because a lot of people don't get this type of information out of their advisement company. You might want to consider that a mandatory thing for people who are managing your money. Check us out, SentaraCapital.com.